Welcome to the Commercial Real Estate Show, your source for market intelligence, forecasts, and success strategies. Well, today we're talking about ways to increase cash flows for your commercial properties. And one of those ways to do that is through cost segregation studies. And it's interesting because I've done some of these studies, and it's remarkable how you can increase wealth and create more cash flow. And it's very straightforward, and not a lot of people are doing it. Well, we'll share that with you today. My guest is Mike Morris. He's with Ernst & Morris, and they do cost segregation studies, and he's here with us in Studio One. Mike, thanks for being with us.
Thank you for having me, Mike.
Well, tell me, Mike, first of all, give me the basic layman's understanding of a cost seg study. What is it?
Cost seg study is an analysis of a building and its components. The IRS requires taxpayers, commercial building taxpayers, to depreciate a building over 39 years. Multifamily residential building owners get to depreciate their building over 27 and a half years. Then both property owners then are allowed to write off certain site improvements over 15 years, and then personal property 7 or 5. And so today is basically a timing difference, the ability to depreciate assets over 5 years instead of 39 years. It defers your tax liabilities, and it also increases cash flow for people that have these studies done. And there's also a great opportunity to go back. The IRS has allowed taxpayers to go back as far as 1990 without amending return to have these studies done to catch up on the depreciation they should have done from day one.
Yeah.
So those are great opportunities.
Yeah, it's amazing because that's one of the benefits of owning investment real estate, right, is that you can depreciate it and use more of that cash flow to build wealth, and you're kind of deferring the taxes, which you're able to create more cash flow and more wealth with, right?
Actually, that's what it's all about. The ability, a dollar in your pocket today is worth more than a dollar tomorrow. Just Finance 101, and that's what cost seg brings to the table.
And it was interesting to me in that my accountant had really never mentioned cost seg to me, and I had to figure it out. But then when I asked my accountant about it, he said, "Oh, by all means, that's a great thing to do." So you guys work with a lot of accountants, right?
Yes, we basically bring the engineering approach to this work to accounting firms, because most accountants don't have the ability to go through construction drawings and do quantity takeoffs, and that's really what we bring to the table, the ability to go through drawings and to quantify all this, and especially under an IRS audit. The IRS comes in, the audits have dropped off significantly over the last several years, but when we go through an audit, we have a set of work papers, color-coded drawings, and it's pretty defensible.
Yeah, and it's amazing to me the amount of people who don't use cost seg, and like I said in the intro, I have used them. It was pretty remarkable because the cost is not that much, and then the savings is big. So what is a typical cost?
Well, I would say on average it's probably $5,000 to $7,000. We do over 800 studies a year, and it really depends on the property size and the type, which dictates the fee. A warehouse would probably be at the bottom as far as just 4 walls, a roof, and some site improvements and some minor interior finishes, all the way up to a research development or hospital, for-profit hospitals. We have special HVAC and surgical, electrical, things like that qualify. Basically, the IRS looks at what's related to the operation of the building versus what's related to the operation of the taxpayer's business.
Yeah, we're talking with Mike Morris with Ernst & Morris about cost seg studies to increase cash flow. So, Mike, are there certain kinds of properties that you are even more beneficial to do studies on?
Well, I would say we have a tremendous amount of experience in supermarkets. Those are great candidates because, again, a simple idea of a supermarket is basically a bakery sink, as an example. Half-inch copper line going to a bakery sink, the taxpayer gets to depreciate that over 5 years. That same half-inch line going to a toilet, they have to write off over 39 years. One's related to the operation of the building, the other one's related to their business. And you apply that analogy to plumbing, mechanical, electrical, that's where the majority of the personal property is that we find.
Okay.
Study.
And how can I figure out if a cost seg study makes sense to me? Is there a cost for me to actually figure that out to begin with?
No, we basically get information from the taxpayer and just ask for some basic information. We provide an estimate up front at no cost of what the benefit is, what our estimate is. We've done over 18,000 studies, so we have a great database of all the different types of properties we've done, and so we draw on that experience to come up with our estimates.
Okay, and can you do any type of property for me in any location in the U.S.?
Yes, anywhere Delta flies is our territory, so we're all over the country. Yeah, I mean, it's like I said, the warehouse is probably at the bottom of the rung as far as property and the potential, all the way up to R&D, data centers, supermarkets, manufacturing, same thing. Manufacturing, all your electrical will go into equipment. The IRS allows you to take that. but electrical for your building lighting, that's 39 years.
So what's an example that may have surprised some of your clients about the increased cash flow they got from a cost seg study?
Well, the best is really the look backs, the ability to go back, because most people aren't aware of that, and then they're really surprised on how much we find, because if you would own a building 20 years, you go back, you catch up all that depreciation from 20 years ago and the year you make that election. So it's a huge opportunity.
Right. So I guess if somebody does one of those, you're on their Christmas card list, right?
I get golf balls sent to me. Yes, they know I'm a golfer. So we also do golf courses too. I mean, privately held golf courses are great candidates, because if you have a green that's USGA spec, you can write that off over 15 years.
Wow.
Cart paths, irrigation, retaining walls, so there's sand traps. There's a lot of cost involved in a golf course that can be written off over 15 years.
Yeah, that's fantastic. And you can tell you guys are a leader in the industry because your phone number is 1-800-COST-SEG and your website is costseg.com.
Yeah, so it's the credibility we get for doing that. I mean, that's something we came up with when I started the company in 1993, so we've had that since then.
Yeah. Well, Mike, thanks for joining us. Appreciate you being in Studio One.
Thank you for having me.
And stay tuned. We'll have more on ways to increase cash flows on the Commercial Real Estate Show. Stay with us. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.